Hi, it's Larry Gaines from Paracycle Trading. In this video, I wanted to show you a really cool trade setup that we had using our Paracycle Trading model and our scanner that we had this past Friday, January the 11th. But before I get started to show you that trade setup, if you've not received my free ebook, this is your chance to get it. So I've got a couple ebooks that are free here. This one is on trading E-mini futures. So just go to powercycletrading.com and put in your name and your email address right here, and you'll get this free ebook, and then I'll show you the other one if you don't have it as well. The other free ebook is Top 15 Trading Option Strategies. So just go to powercycletrading.com, put in your name, email address, and you'll get that right away. So two really nice ebooks that will help you in your trading. Now, at Paracycle Trading, we use a rule-based trading model for all of our trading, intraday, and swing trading. And from that model, we've developed a really great trading scanner that we can use to identify trading opportunities for what we call volatility squeeze breakout momentum trades. And these particular type of trade setups have a certain parameter that we have programmed into our system, and we've programmed it into the scanner so we can scan thousands of stocks or any asset class to look for these potential trade setups. So if you notice here, this is a scan that I did just for any stock that has weekly options. And I can scan it and I can break it down to any time frame, even down to tick time frames, basically minute time frames for things that are in what we call a volatility squeeze, which we teach you how to trade at Paracycle Trading. But here's, for example, of a potential trade setup for GDX, which is one of the gold miner ETFs, and it's currently at the close Friday. It was in a 5-minute squeeze, a 15-minute, a 30-minute, and a 60-minute squeeze, and actually in a daily squeeze. And the red indication here indicates that in this potential time frame, the high probability is for it to resolve itself to the downside, so a momentum break to the downside in red. And on a daily, it's showing it in green, which represents a momentum break to the upside. So these are things that we can scan for. We can go through and look at futures as well. I'll show you that. Now this is on our Thinkorswim platform. We use this platform because we have this modeled with what is called ThinkScript. So I can go in here to public, and I can go down to all ETFs. Now I'm loading here right now. And here it pops up. AAXJ is in a 5-minute squeeze, a 15, a 30, a 60. I can put this on to see everything that's in a 60-minute squeeze. It's loading right now. So I can, set it to all ETFs. I can go in here right here, and I can go to futures, and we can do the same thing for the futures contracts. Let me get that. Now here's all the various futures contracts, and you can see here we're in a volatility squeeze on the 60-minute time frame. Potential to the upside is in green, and that's for the S&P futures, the Russell 2000, NASDAQ 100. You can see all the different contracts here, and I can shift to the 30-minute right here to see everything in a 30-minute squeeze, and go, so forth. So what we'll do with this information, once we identify a squeeze and something we want to trade, we can then break it down based on our model to even shorter term time frames. Any tick time frame, so 133 ticks, 400, whatever time frame we want, minutes, 2 minutes, and then we can spot these squeeze opportunities and get ready for the trade. And I'll show you one trade that we had set up today on Apple, and I'll show you what happened. Now, using our scanner tool, we can find these type of opportunities just about on anything, but this one popped up here on Apple, which we trade quite a bit anyway. This is a 15-minute time frame for Apple, And you can see that the consolidation of the price, each bar is 15 minutes, and you can see how it starts narrowing in, narrowing in. And this is what we call a volatility squeeze. When price starts to narrow, 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 that means it's coming in, it doesn't know which direction to go, and the opportunity is that there's a high probability trade setup to either have this pop to the upside or pop to the downside. So the key question then remains, okay, where is it going to break, to the upside or downside? And based on our trading model, we have it a rule base where we can give a high probability direction, so we can get into a trade either long or short based on our model, and we can take advantage of the volatility break to the upside. Just think of like compressing a spring. You keep pushing it in, making it tighter and tighter, and eventually you just can't keep the pressure on it, and it releases and pops out. And that's exactly what happens with the volatility squeeze, and these are great things to trade. And this one happened today, Friday the 11th of January, and this shows you on a 15-minute chart. I'll show you some other time frames. We had a volatility squeeze. Our system went long right here at 12:30 Central based on our model. We had a nice trend breakout to the upside. Our model will also show, based on our Thinkorswim customized package, it will show the resolve to the upside or downside based on the squeeze. So this is just to show you the potential here. So at this particular time frame, it went from $521 a share up to $523 a share, and this took about 4 to 5 minutes. So the next chart I'll show you is breaking it down further, and then I'll show you how we trade these. Now we'll monitor multiple time frames. And this is our 5-minute time frame. This is one of our key time frames that we use. And you can see the price action here squeezing in, just like a funnel. And finally, the pressure is so great that it pops to the upside. So the question is, where is it going to pop, up or down? And that's what happens. That's what's great about our trading model. We can give a high probability direction of where that's going to take place. And on this trade, it said it was going to trade up. So our model went long, gave an indication that it was going to go to the upside based on the model that we used, and that was at 12:15 Central. And then you can see it had this huge break to the upside at 12:35 Central. So it went again from 521 up here to 523 and a half. Again, with our trading system, we use multiple time frames, and this is a 400 tick chart. And the system based on this time frame went long again at 12:15. So it gives the direction, high probability direction of where the squeeze trade will resolve or trigger to. And again, here it triggered to the upside. You can see it, nice breakout. So the way we trade these, you can either trade shares or you can trade options. And if it's on a stock, we like to use weekly options if we can. And I'll show you a couple of the opportunities that we had and how those panned out. Now, with any business, you need to be able to plan what you're going to do. You need to have a strategy, and you need to have a plan at all times. So, if you have a good trading system or tool that you can rely on for our direction of a market, you can then get ready and prepare a trading strategy. So what we like to do is, for these volatility squeeze breakout trades, once we get an idea directionally where it's going to happen, we can get ready with a strategy. And this is using weekly options. This particular option was one on Apple that expired yesterday on expiration. So this is the 5:15 call. This was deep in the money. It had about a 95 delta. So you could have bought this. If you bought this, you could have bought it at $635 a contract, and it shot all the way up to $850, actually greater than $850 a contract. This is this happened. This is 1 minute. This is 1 minute. So this took about 4 or 5 minutes to get all the way up here to $850. It was up in 2 minutes. It was up to $800 a contract. Now this particular trade, if you'd gotten in here right when our signal triggered, you would have made over $200 a contract, and that took about 2 to 4 minutes, and that would have been a 34% return on your capital in that short period of time. Now if you wanted to go for a lower cost option, you could have gone for, this is an example using the $520 calls expiring yesterday, on Friday. And you could have bought these for as low as $210 a contract right here, and they shot up to $380 a contract. So potential profit there was as high as over $170. And if you take that divided by your capital cost, that's over That's an 80% return on your capital. So, and your at risk is $210 max. Now here's one more to give you an idea. Now this is the 525 call expiring yesterday. You could have bought this for as low as $40 a contract based on our system and the trade breakout, and it went up to over $90 a contract. So that potential profit was $50. So if you'd made $50 on that, divided by your capital cost of 40, that's 125% return on your capital. So that's how we use weekly options. That's how we can utilize our squeeze opportunities based on our scanner. So if you'd like to learn more about how we trade, and we also trade futures using the same model, please come join me at powercycletrading.com, and thank you for your time.